Hey, good morning. Welcome to the mortgage rate forecast with Criss. It's September 13th. And start with the charts. Look at this, guys. We are low, low. Isn't there a song about that? We're at 103.19 this morning. This is rough, guys. It's really not as bad as it looks. I'll get into that here in a second, but our supports are at 103.42 and 103.24. You can see those in the green. And our resistance, let's not even talk about resistance. Our supports are turning into our resistance. Okay, so I always kind of explain to my clients, it's kind of like this old decrepit hotel with all these floors, right? And so you might be walking on this floor right here, and and something bad happens and you fall through. Well, you're going to fall through to the next floor, which is the second resistance. Well, guess what? This floor that you fell through, and you're now on this floor, the second level of support. Well, guess what? To get back through is going to be much tougher. So this ceiling, this floor that was your support, now turns into the resistance or the ceiling that you gotta break back through. Okay, so you know what? I'm not even going to talk about these red lines because guess what? Our new resistance is our old floor that we opened with this morning. So anyway, not too hot. There's no reports this morning, which is pretty crazy. I think a lot of this could be obviously the Dow is down really bad today. And since my last report on Friday, the Fed came out and just stirred up havoc. They're like, hey, the short-term rate, probably going to increase it. So that's really pushed a lot of downward momentum onto the market. So bonds are not doing really well. And even though there's no news today, I mean, you can see we opened at about 103.40, and I mean, we're trading down at 103.19 now. Rough. So, but why is it not as bad as it looks? There technically was a rollover today at for 30 basis points, or basically 30 cents. So even though we opened at about 103.40, technically it was kind of like we were opening at 103.70 up here. And so at any rate, the Dow is down, like I mentioned. And to kind of quantify where we're at, this is kind of interesting. Freddie Mac sources down here came out and reported that the average rate was 3.44 at half of a point in August as well. So average trading, let's just say, is around 103.70. We're currently trading about 103.51. So where the average consumer last month was paying half a point, we might be paying closer to a full point to get down to that rate. So kind of be careful there. Now, what's the forecast? Dude, inconsistent. One of my analysts, very neutral, like, hey, I think it's going to be okay. The other analyst is like super bearish. They think interest rates are going to go up, fees are going to go up. So really inconsistent on both the short and the long term. So here is my forecast. And my forecast from last time was a little off. I think the Fed coming out last week and just doing what they said what they said, that had an impact. So I'm going to say, in the short term, if you're like looking at getting a mortgage in the next week to month, you know what? You're right in the middle of the trading range. I would say if you stay strong, stay tough, you could probably hit the top of that trading range and maybe improve your fee position by about 1/4 of a point. But you could lose about 1/4 of a point too if you're not careful, maybe even as much as a half a point. But I think until over the next week, you're going to only see a 1/4 point sway. I think if you're tough, if it's a long-term thing, if the Fed does come out and increase the short-term rate, they don't control long-term rates like mortgages, right? They control short-term rate, like your prime, like your home equity line of credit, your credit cards that are tied to the prime rate. They control that. So when they come out and increase the short-term rate, if they actually do, it's going to hurt us a little bit now, but it could be a really good thing for you in the long run, because what it does is that fights inflation, that actually helps out bonds, and that actually slows down the economy. So that could actually be a really good thing for mortgage-backed securities in the long run. So short run, I'm going to say, hey, yeah, you know what? You're right in the middle of the trading range. Lock if you want to play it safe. Otherwise, I think you could actually improve a little bit. I kind of feel like today investors kind of like oversold it a little bit. But if you're in it for the long haul, I would say don't stress too much. I don't think this is going to be a very long downward trading channel that we're seeing. So Don't stress about it too much, okay? That's it for now. I will be back in touch either later this week or next week. And hey, if it's your first time on the channel, up at the top left, you can hit subscribe, and that will keep you updated on new posts. And you know, we'd love to hear from you. Leave your comments down below. Let us know what you think. What do you think the Fed's going to do? Do you think they're going to increase? A lot of people didn't think they would, but now they're talking like it would, so we'll see. And everything likes to be liked, so does this video. Don't forget to hit that like button. And if it's your first time on the channel and you're like, hey, what the heck does all this mean? I'm just a dude wanting to like get a mortgage, and why is this important to me? How does this really impact me? At the top right, Mortgage Bonds 101, that'll teach you the basics of how these mortgage bonds, how they trade, impact you as a consumer getting a 30-year fixed mortgage. Anyway, that's it for now. We'll talk to you later. Take care, guys. Bye-bye.